Good morning. My name is Ted Polsey. I'll be interviewing Lawrence Geller this morning. Just a little background on Lawrence. Well, first of all, let me say this is Welcome to Meet the Masters. This is an original Lawrence Geller production. Lawrence devised this some time ago with Barry Pascal, and it's really taken off. It's doing well. There are speakers booked through the end of September, and more are being added as we go along. Lawrence is the president of L.I. Geller Insurance Agencies, and also founded For Advisors Only, which many of you may be subscribing to. He's a specialist in living benefits and litigation support and claims for sorry, something just came up on my screen here. Sorry, living benefits and claim and litigation support. And he's been actively involved in the insurance industry for more than 4 decades. And I've known Lawrence for most of that time. Lawrence, in his introduction piece, said he's been involved with many of the major initiatives of Advocacy and its predecessors, which was LUAC, through the end of the 20th century and beginning the 21st. But I think there's a lot more to it than that. I was chair of LUAC some years ago, and throughout all of this period and before, Lawrence has been involved. He is a co-founder, I believe, of the E&O coverage. He co-founded the Canada Sales Congress. He was involved in the founding of the Century Initiative program. He's been a member of CLU, MDRT. He's been involved in just about every important issue that LUAC and Advocacy has been involved in over the last 35 or 40 years. So I couldn't be more proud than to be interviewing Lawrence this morning. Lawrence, welcome.
Thank you, Todd.
And you and I were speaking, and I told you that that introduction that you gave me didn't really say the whole piece, and it doesn't, but we'll get to a little more in the next hour or so. Tell me about your background, where your family background, and how you found your way to the insurance business.
Sure, I'm Canadian. I'm from Toronto.
Yep.
I grew up mostly in Forest Hill. I essentially had horseshoes my entire life. My parents were very involved. My father was a partner in a law firm when law firms in Toronto were quite small, and was involved with everything from the Jewish Immigrant Aid Society to the United Jewish Appeal to United Jewish Welfare Fund to Canadian Jewish Congress to being life president of his synagogue, very involved in everything. My mother was also involved. My mother believed in leading from the front of the room. She didn't belong to very many associations where she hadn't been or wasn't president. And that was fortunate. I grew up in a house where people flowed through the house, people of some note, and where every Friday night virtually was a different dinner party with people to speak with who knew what they were talking about, who were people of depth and substance, and that was a good foundation.
And what drew you to the insurance industry?
I graduated from university and really didn't know what to do. My mentor at the time, Harry Wolfson, and I talked about law, and he asked why, and I thought about it for a while, and the answer was to compete with my father. And he pointed out that my father had 25 years on me, and that was probably a mug's game. And my cousin Paul Lane and his father Jack Lane were in the insurance business. And Paul said, well, you know, if you join Concordia Life, what became Colonia about then, they'll pay you $10,000 a year to learn to sell insurance. I guess neither he nor the manager thought to tell me about a validation system where after the first check, you had to earn your way.
Yeah.
And so that's how I got into the business.
Okay. And what was your education in? What was your degree?
International relations, jurisprudence, philosophy, and stuff that really doesn't have much place in the real world anymore.
Mm-hmm. Okay. All right. And you started at Concordia, which became Colonia. What happened after that?
Well, about 9 months in, I realized that I really wasn't a good fit for that branch, and that I probably needed a different sort of assistance. And my mother at the time was involved with the founding of the United Wave from the United Appeal. And she was on a board with John Munro from Canada Life, Senior Vice President of Marketing at Canada Life. And so she said, well, why don't you go and talk to John? And I called him and went to lunch with him. And we talked for a couple of hours. Went back to his office, beautiful office on the third floor of that wonderful building on University Avenue, wood paneled. I mean, what you always thought of as a fantastic office. And we talked a bit more, and he said, you know, you're not going to be a good fit for the branch that I'm thinking of with us. You and the manager would fight like cats and dogs. And so he walked me up the street to Imperial Life. That was in the day of real collegiality in the business. And he walked me up the street to Imperial Life to John Ferguson, who had been 3IC on the HMCS Haida during the war and didn't brook many problems from people. And I joined the branch, and John and Barry Reebok, who was the sales manager, took me under their wing. And I spent the next 5 years there until I joined Creative Planning.
And how was that experience in terms of learning how to sell and finding clients? And
I started with the Mites directory like everybody else, and started culling from the back of the book and the middle of the book and trying to find a hook to hang my hat on, as Barry Reebok always referred to it. And then I spoke with Wolf Goodman, who was also a friend of my father's. And I spent an evening with Wolf, had dinner with Millie and Wolf, and then we sat in his den and talked. And we talked about essentially niche marketing. Who did I know who I could do business with? What did I know as a profession, as a group to deal with? And the answer that he and I came to was young lawyers. Yep. And so I started to focus on young lawyers after that, and to try to call them. And I used the Orange directory, the legal directory for Ontario, and went through it, trying to find young people who recently called. And then I met Bob Gould Sr. from Paul Revere Life. And Bob had just come down from Saskatchewan to try to get brokerage going for Paul Revere, which had been a captive agency company for many years in Canada. And Terry Zavitz, who we interviewed a couple of weeks ago, was actually an agent there in the captive agency subsequently, not at that time, but a little bit later. And so Bob opened up brokerage, and he came to me and said, you know, you have a great way, you have a great market, go talk to young lawyers. And Bob and I looked at the Canadian Bar Insurance Plan, the CBIA plan, and we figured out how lawyers could be disabled but not covered under that plan. Yep. Then I marketed the risk, talked with people about what would happen if. And that, I guess, became my career.
So tell me about that conversation. How did that evolve? What kind of questions did you ask, and what kind of responses were you getting?
Oh. You know, professions are strange, and within professions there are groups, there are different segments. And I was looking for partners in law firms because that's what I knew, and young associates really at the time, and they were called juniors, with law firms, young people who were between 28 and 32, 33 years old. And I knew that they had relatively low incomes compared to what they would have ultimately. I knew that partners in these law firms were doing very well. And the juniors were counting on that, counting on becoming partners, counting on their incomes going up progressively over time. And they were incurring expenses and debts based on that expectation of increased income. I also knew that to actually become a partner in one of these firms, you had to be in the top 1%, say, of lawyers in the city. And that was a pretty select group. Might be 2%, whatever the number was, it was a small percentage. And I knew that people went off when there was a problem, a physical problem. And we only knew about physical problems back then. That's what we talked about. Yeah. And so I'd ask them what would happen if they were not able to concentrate as much, or not able to work as many hours. Because a young lawyer had in those days worked 14 to 16 hours a day, and they still do. So what happens if you can't work that much? What if you're taking a medication and all of a sudden you lose your edge? Will that affect your income today? Will it affect your income tomorrow? Would you be totally unable to work? Or would it just be a reduction in your work? What would happen to your income if you had a reduction in the time you were billing? Because, very much law, like many professions, is eat what you kill. In other words, if you don't bill, next year you don't get an income.
Yeah.
So you're affecting your future income. And we started talking about those things, and I'd ask the questions, and they would very quickly realize that they needed this protection. And then I'd sit them down and I'd say, look, I'm not a lawyer, you're a lawyer. So let's go through the bar plan and see what it says. And they'd say, well, it doesn't cover what we just discussed. And I'd say, okay, well, let's look at this plan. Paul Revere, what was at the time called the Preferred Profession 940 series. Mm-hmm. And we looked at that and they said, well, this does cover that. Well, then they wanted to buy it. I'm not a very good salesman, but I'm really good at helping people to buy.
Okay. So that's great. Those are a lot of individual sales. But Lawrence, you evolved out of that into more group style sales.
There was a tax lawyer, young tax partner with Campbell, Godfrey, and Ludus at the time. Wonderful guy, but very set in his ways and very. Yeah. He knew that he knew more than anybody else in his area, and he figured he probably knew more about what I did than I did. And he said to me, I don't like doing applications. I don't like answering questions. If you can figure out how I can buy this coverage with the fewest possible problems, I'll buy it, and I'll get everybody else in the firm to buy it. And so I went back to Bob Gould and I said, Bob, here's what's happened. And he said, if you'll help me with another problem that I have, which is a new product, because this guy's a tax lawyer and he can help with this, then, because it was what we subsequently called deferred tax protection, because we had stub years, and we'll come back to that. But he said, if you can help me with that, I'll figure out how we can do what we at the time tried to call guarantee 2 issue, where Paul Revere would issue something to everybody in the firm. They'd ask 5 questions. At the time, it was 7 questions. And based on that, they would issue something. It might be total disability only. It might have an extended waiting period, elimination period. Mm-hmm. It might have an abbreviated benefit period, which we used to call LP and BP riders. Or it might be a watered down product, total disability only, but we will issue something. At the time, we issued 17 policies, which I thought was pretty good. 17 policies, $1,500 a month each, about $800 a month each of average premium, or a year rather each. Yep. That wasn't a bad sale back in 1979.
Yeah.
And that progressed over time to guaranteed issue and then guaranteed standard issue. We developed the stub year was when a profession could move their tax year around and defer. And some of these guys were 23 months behind on their taxes. Essentially, the government, the tax department, was financing 23 months of double income. And the problem was that if you got disabled and your income stopped, all of a sudden you had to start paying for 23 months after that. Yeah. So we developed a deferred tax protection to cover that. Then we developed loan protection and loan interest protection. We did all of that, and it all fit into guaranteed standard issue very well.
Okay, and I should say thank you for that, because I actually sold a couple of those to a couple of law firms that I was doing business with. That was a great product, the deferred liability.
Yeah, I had a very small part of the market, but you know what? It was good enough to live on.
Yeah, that's great. All right. And what does your business look like now? If you can sort of summarize.
I'm a lot older now. We still do
Yeah.
guaranteed standard issue. But within the past 2 years, I've realized that most of the insurance that I sold 30, 40, 20 years ago now requires service. And so we're still providing service, but I've realized that I'm not going to be here for 20 or 30 more years probably. And so I'm not actively selling new underwritten business. We're referring that to others. I'm still doing GSI. It's group insurance. We're doing the group LTD and the GSI. And that means there's new business coming in every year. But Heather and I are essentially running a service practice, trying to make sure that our clients have as few problems as possible.
Okay. All right. And what are your business priorities today relative to what they were 20, 30 years ago?
I'm not as hungry. I'm not looking to build anything new in the business. I'm not really looking to develop new products. I haven't been involved in that for some time. Essentially, I guess my priority today is to help others to the extent that I can, to be as successful as possible as professional insurance agents.
Okay. All right. Lawrence, we've been in a study group for a long time. I don't even know how long. It's 20 years.
I think you've probably been a member for about 20 years. We started the group was started by Dave Cowper and Zoltan Krista Barza's father.
Okay. All right.
Brian Anderson and Leon Lewis, who worked with Dave Cowper back in the day, and it was started, as I recall, in 1985. So it's about what was that, 38 years?
Okay. So talk to me about, and I can talk about this as well, but I mean, tell me what you see as the value of study groups, because I know you've been in a number of them, and you're in at least a couple now, I think.
We can't all know everything.
Yeah.
We can't all be good at everything, but we should all know what exists, what you can do in the business. We also need people who are examples of how you can do it. So when I was younger, it was an honor to be a part of the study group. And when I was invited to join the Hull McQuillan study group, I remember going home to my wife, and it was probably the most significant thing that had happened to my career. It was a big deal to be invited to join people like that and to sit at their feet and learn from them. I've always believed in mentors. My father had mentors. He introduced me to my first mentor. Oh God, I think I was probably 13. Jack Shinman, who owned Careful Hand Laundry, which you may recall at the time. I used to go to the Primrose Club and sit with him while he had lunch with his friends and listen. As I said, Harry Wolfson was an early mentor, and then Wolf Goodman, Mel Gilbert, Joe Dickstein. I've always had mentors. I guess as we get older, they start to leave the scene, and we start to mentor others more. And that's part of the continuity that's part of insurance and has been for as long as I am aware.
Yeah. When I first came into the business, I didn't really understand that either. It didn't make sense. Why would older agents, more experienced, successful, why would they want to spend time helping young people become successful? That doesn't happen in other businesses, but you've done a lot of that work yourself.
Right. I mean, we tried to create a mentorship program for advocates a couple of times, and you do what you can, and then you hand it off and hope others do it too.
Yeah. Lawrence, when we were speaking the other day, you mentioned that you helped to, I don't want to use the wrong words here, but it wasn't break the agency system, but it was to change the way business was done. You were one of the innovators on that. Can you talk about that?
Yeah, well, it was after I joined Creative Planning. And Creative Planning was a North American life agency, which, like so many at the time, because of production, was allowed to sell outside business as well. But most agents weren't allowed to sell outside business. We were captive agents of insurance companies, and we had to have what was called a single case agreement to write business with a company other than our mother company, other than our licensing company, sponsoring company. And as I've noted earlier, I was selling a fair amount of Paul Revere Life and some Provident business at the time. And so Sheldon Turk was always writing letters for me. And Mel and I were at lunch one day and talking about this, and I said, well, what happens to people who can't get letters? He said, well, they can't write business for any other company. I said, well, what if the best product for the client is with another company? They said, well, he said, well, they still have to sell their company's product. They have to sell from the rate book. And that didn't feel right to me. And so we went to meet with FISCO, as it was called at the time. Actually, it was called the Ontario Insurance Commission.
Yeah.
At the time, the OIC. And we met with the lawyer there, two of them, two Johns, John Petrozoniak and Joe Nemeth, both retired now, and talked about this, and we worked with them. And it was unfortunate, I guess. It was the right thing to do at the time. In retrospect, I'm not sure the industry is any better for us having done it, except that there is the possibility for real brokerage business. So some of us can do real brokerage business.
Yeah.
And that was, what was that, almost 40 years ago?
Yeah. I mean, and the industry has changed. I've been involved in LUAC and advocates for a long time. And there's been a lot of changes, and I think mostly good ones, some not so good, but mostly good ones. Certainly the consumer is better served now than he or she was 40 years ago, 45 years ago. I think that those changes you're talking about added to that improvement, the consumerism movement.
But it's also forced, interesting, or allowed companies to improve the quality of their product, to be competitive.
Yeah.
There was far less competition back then.
Yeah. I remember a conversation, I won't mention the company names, but two very large companies. And one of the CEOs said to me, do you know that company on Bloor Street? They actually operate with budgets. He said, I don't know what they're doing, but they have budgets. And I had finished business at Ryerson. I thought, are you telling me you don't have a budget? I mean, it was crazy, but those were good old days. Lawrence, and again, we talked about this the other day, but I have some processes in my office, almost all of which have been originated out of the work that you do and some of the processes that you do. Talk to us about how you bring a new client on. I know you're very sensitive. And you've heard me say, I think you're more sensitive than you need to be, but we all set our own standards, but you're very sensitive to what can happen. And I know you have some very strict processes to bring in a new client in the sale of insurance and service.
If you ask Heather, it's the admin who I work with, we've been together now for coming on 28 years, I guess. I'm a little bit obsessive, probably not just about that. I think I have OCD, but I'm obsessive, and so our process keeps getting tweaked. It keeps getting, to my mind, improved. You have to remember who my clientele are. They're partners in national and multinational law firms. I learned very early on it costs them nothing to sue you. They stick a junior or an associate on it, and they come after you. And that's the last thing I want. I mean, if somebody comes after me, I want them to go away immediately, admitting that they have no case, resile their case, go away, leave me alone. And the only way I know of to do that is to dot every I and cross every T, and to make sure that the client makes every decision, knowing that they make an informed decision. And so our process is designed for the conveying of the information and the confirmation that the client has it and understands it. You know, you think a lawyer would understand everything, but the truth is everybody knows what they know and doesn't know what they don't know.
Yeah.
And so we have to explain things. You know, I was reading Ken McCoy had something on the FAO Facebook page today, where he talked about this, and it is essential that the clients understand the process and that the process be covered. Consistency is also essential. So everybody has to see the process in exactly the same way. It has to occur in exactly the same way. We need a disclosure agreement signed and coming back to us, an engagement letter essentially, which is the 34704 disclosure that we designed for advocates and for the CLHIA. And we still use that same disclosure, tweaked a little bit. I'm obsessive about each area of practice being discrete. So if I'm talking to you, Ted, about disability income protection, you sign an engagement letter for me to talk with you about disability income protection, period. If at the end of that conversation we want to talk about CI, you sign another engagement agreement for CI. If you want to talk about personal life insurance, we do one for that, or LTC, or whatever it is. So we have a different file for each of those products, and a new engagement letter for each of those products. We do disclosure constantly. You know, you hear about the reason why letter. Well, I start the reason why letter as soon as we start the conversation. So we have a conversation, and I summarize what we've talked about and what they think the problem is. And then we discuss some solutions, and we summarize the problem and then the solutions we've discussed. And then they make a decision, and we summarize the problem and the solutions we've discussed, and then the solution they've chosen. And then when the policy is issued, we send that same summary again, which has upset many a compliance officer at an MGA, because it's the same letter every time. And they keep saying it's the same letter every time. Nothing has changed. Problem's the same. Solutions we discussed are the same. Solution they chose is the same. Why shouldn't it be the same letter? Even when we do a life insurance replacement declaration, we're obsessive about that. And so what happens is that you're supposed to, they say, get the question signed off on. So there are X number of questions. Client signs at the bottom saying we discussed all this. Well, why wouldn't you just take those questions, put them into a letter? Question 1, here's the answer. Question 2, here's the answer. Question 3, sign off on it. Now there's no discussion about what we discussed. If 6 months from now, or 10 years from now, or 40 years from now, you question it, I go back and say, you signed this, saying we discussed it. Mm-hmm. My handwriting is on no application. I sit on this side of the phone of the Zoom meeting. The client sits on the other side, and I ask the questions to make sure the client understands the answers. And there are trick questions on applications. Mm-hmm. Like, have you ever had any decided disorder of the eyes, ears, nose, throat, or lungs, including blood spitting, tuberculosis, tumor, cyst, asthma, bronchitis, impairment of hearing or sight? That's one question. Yeah. Let's break it down. Ted, tell me, do you wear glasses?
No.
I see. Yeah. And why do you wear glasses? Well, I wear glasses because I'm short-sighted. Would you think that was an impairment of sight? Yes, circular. Tell me,
Yeah.
would you wear a hearing aid? You know, as we get older, people wear hearing aids. If you believe the people who advertise at 50 we're supposed to get. So, okay, well, do you wear a hearing aid? Because that's an impairment of hearing. And then we get to other trick questions like surgeries. Well, did you have your tonsils out when you were a kid? So you have to ask questions in depth. And my brother, I think, is one of the reasons that you have to do that, because there are lawyers who understand this and who want to know that the clients have actually answered the questions and had the opportunity to answer the questions. So the process has to be designed for that. And the process has to be consistent across the board for everybody. So if somebody says, he didn't do that with me, I want to be able to bookend them with 50 people on either side who swear that I did it with them. Now the judge gets to decide whether I just had a momentary lapse or whether the client just doesn't necessarily remember the records aren't as good as they think.
Yeah. Yeah. And that's one of the rules, not exactly that, but your contemporary notes are worth an enormous amount of somebody's memory, are considerably better. Lawrence, you mentioned the other day that if you get a letter from a lawyer that says we want to look into something that you sold, you have a process for dealing with that.
Yeah. I developed Jeff Kaufman at Damascus was the one who suggested this to me, probably 25 years ago. And then I spoke with Les Rose, who also agreed with it. And so what I do, and that was at a time when I was with Creative, it was more than 25 years ago, it was 30 years ago, when I was with Creative Planning and there was a problem. And I said, what do I do? He said, well, are you sure you're clean? You're sure you have no problem? I said, yeah, I'm absolutely sure. He said, okay, take a photocopy of your file and send me the original. Seal it up, double bag it, put it in 2 envelopes, tape them up, send it to me. And now it is hermetically sealed, Les said. I can't touch it again. He won't open the envelope until he has to. And I work from the copy. I went one step further. I made 2 copies and I sent one to the lawyer who had said, had told me that there might be a problem. I said, tell you what?
Yeah.
I'll tell you what, I will send you my file. My errors and omissions insurer will hate this. They will tell me this is my problem from now on. And I've actually told the insurers I do this. But to be frank, I've done it 4 times in my career. I checked. So I send it to them and I say, look, I'm sending you the file. If you still come after me after this and you lose, I'm going to come after you, the lawyer, personally for aggravated and punitive damages. Because you've had the evidence from day one that this claim had no merit. You have to be sure the claim has no merit. You have to be sure you're absolutely clean.
Yeah. Mm-hmm.
It's like I remember years ago an agent being attacked for not selling term to a client, selling permanent insurance, because the permanent insurance was more expensive, and the lawyer said he could have had 10 times as much insurance, which would have been fine, except the client had written to him saying, I don't want more insurance. I want this much of it, this much insurance.
Yep.
Having that in the file made all the difference. When we went through the file for the agent panicked. I said, give me your file. We went through the file. I said to him, did you tell him that you had this? He said, no. I said, dude, you know what? This was just after faxes came in. I said, dude, do yourself a favor. Fax a copy of this letter to the lawyer. The lawyer called and apologized to the agent.
Yeah.
So, there are 2 ways you can think of things, well, 3. But one is you can't be careful, too careful. And the other is you can't be careful enough. I operate on that principle. You can't be careful enough.
Yeah. It's good advice. It is very difficult to follow to the nth degree in your entire business, but it's great advice. And as I mentioned, we've copied a lot of what we've copied and developed a lot of what you've talked about. Okay. I've got some more questions. I guess in terms of bringing in a new client, and I understand you're not doing new client business now, but how do you find a new client? And what did your conversation look like when you started? So I'm talking about maybe 10 years ago, 15 years ago.
Well, again, as I said, I have horseshoes. I've been very lucky. When I was with Imperial Life, Alan Luscardi, who were top of the table producers, allowed me to work with them and to do technical work with Walter Bartney and Al Kinch and learn that side of policy analysis, and to do disability insurance for their clients. And then when I moved to creative planning, Sheldon and Mel and Don Morrison, to a lesser extent, mostly Sheldon and Mel, would take me into their clients to work with the law firms and accounting firms and do disability work. It's amazing. People didn't like, and to a great extent still don't like, disability because they don't understand it. I think that's the only reason that they wouldn't like it. And so they're happy to let someone else do it for half of the business. So they get half, I get half. Subsequently, Bob Gould Jr., the son, joined Creative Plan. Bob, quite frankly, is one of the best prospectors I've ever met. And he would go out and find business for me. That's really, really lucky. I didn't have to prospect. And then Crean McConnell, Peter Crean came on the scene, and they would farm business out to me. So I developed a lot of business with them and through them. I also work on recommendation. I'm not a very good prospector. Although I'm happy to make cold calls, as anyone who is speaking in this webinar series knows, I will happily call and get people to do things. I just figured it was a lot more meaningful if they called me. I guess partially because I'm really lazy, like GSI with mandatory participation. If a client or a prospect calls you and says, I want to talk about insurance, the chance they're going to buy something is a lot more than if you call them and say, I want you to buy insurance. Right. So I work on recommendations from other people. And I've always tried to make sure, going back to Wolf Goodman, when I was with Wolf Goodman back then, at some point towards the end of the conversation, he said, young Geller, when you leave a client's office, they should say, if I sold insurance, God forbid, that's the way I'd do it. And I was pretty stupid, and it took me 2 years to figure out what he meant. And I went back to him and said, I think what you mean is that in order to be a successful member of a major law firm, you have to think you're one of the best at what you do, if not in the world, at least in the country or the city. And when you say, if I did this awful thing, God forbid, I do it that way, what you're saying is Geller does it as well as I can conceive of anybody doing it. And you hope that that will result in recommendations where somebody else complains or says, I'm doing this, and they're trying to sell me a load of whatever. And somebody says, well, call Geller, get a second opinion. And so half of my career has been second opinions.
Yeah. We had that interaction. One of my good clients called you and asked for a second opinion on the advice that I had given them. And that was great.
Well, the advice that you and 2 other companies, there was a bit of competition on that one, and but that was an interesting file. That was my first file for a family office, in fact.
Yeah. I've got a few more questions, but one of them is, what's your sense of the importance of building a balance sheet? This came up in the session I did with Barry a few weeks ago, and I know Joe Dickstein and I talked about it a number of times. I had said to Joe, and you and I have spoken about this, that it just confounds me that so many successful people in our business don't end up with a lot at the end of the day. And I had asked Joe about that. What's your sense, and why is it so important to you?
Let me start by saying a lot of agents only think they sell really well when they're hungry. And so they intentionally make sure that they're always hungry. I mean, one of the people we spoke about just a while back was a perfect example of that. He would sell bigger policies than anyone in Canada could conceive of, but he did it to pay his bills. I mean, he was always looking to pay his bills. So I'd like to start, before I talk about balance sheet, to talk about my attitude about commissions.
Mhm.
Very early on, really because of Bob Gold Sr., I began to understand the value of a level commission income, fully vested income check, where as long as the policy was in force, you were paid to provide service. And so my disability books and other living benefit books were always built on a level commission basis. And what that meant was that, it's not great the first year. You go from, say, 100% first year commission to 50%. But the second year it's 30%. So every year you're adding whatever it is, 15% of whatever you've sold that year to everything you've sold before that's still in force. So that in 2008, 2009, when I had a major health crisis, my income actually went up that year because I'd been very busy the year before. And it's continued on. And so balance sheets are the corollary of that. They are the flip side of the coin. We all have bad years. We all have years that aren't as good as we would hope. Sometimes we have years where it's due to illness or other problems. And so I think a minimum of 6 months, but ideally 2 years income, sitting in cash or cash equivalents, so you can access it relatively readily, is protection. But I think of it as an elimination period for disability. When I talk with people about elimination periods, question is, well, do you have enough money in the bank today to pay your bills for 90 days? Because if you do, then that's a 60-day elimination period because you're paid monthly in arrears. Do you have enough for 120 days? How much do you have in the bank? Because the more you have, the longer you can afford to wait, not want to, before the money comes in. Remembering with an elimination period, of course, that there's the other end of the scale, which is after you're disabled, it takes this long for money to start flowing. Yep. So you get a recovery benefit. But balance sheets are the same. So think of it as an elimination period. How long can you afford to wait before the benefit kicks in? That's how much money you need in the stash.
Okay, that's great. What's your advice to new advisors, Lawrence? If I was looking at the insurance business, or if I just come into the insurance business, what would you tell me?
The most important thing I can think of is to identify people in the business and outside, but in the business, who you respect, who do things in ways that you respect, who deal with novel markets, who do things. There are 3 types of people on earth, Ted. There are people who think inside the box, people who think outside the box, and people who never knew there was a box there in the first place. To my mind, it's the people in the third category who do best in life and financially, because they're not constrained by knowing that there's a box. And mentorship, having a variety of mentors, helps you to break the box, because all of the mentors will do things different. If you've listened to the webinar series, every master has done things somewhat differently. They've all had integrity. They've all put their clients first. Have all been more concerned about doing the right thing than earning money, because they can afford to, because doing the right thing always results in a better income, to my mind, and I think to many, many successful people's minds. Yeah. But mentorship allows you to understand that, because you meet people who've done it before. The best way I can think of is to invite people to breakfast or lunch, because everybody eats breakfast or lunch. Some people eat 2 a day. Some people more. But invite them to lunch. Invite them to somewhere they would go, where they're comfortable, because that's their environment. That will help them to be more comfortable communicating with you. Try to get into study groups. If you can't get into one, form one. Yeah. If you need a way to do it, CLU has a template that we developed for them. I'll send you a copy if you want. Just ask me. Great. Study groups are a great way to meet other people and to get other people's opinions. And mentoring isn't necessarily somebody older. It's just somebody who you respect.
What about Obviously, if you're going to specialize in an area, you want to look towards educating yourself in that area. But what about areas like STEP, business valuation? I'm trying to think of some other FAO, not FAO, family enterprise
Oh,
advisors, FEA.
again, that is not reinventing the wheel,
Yeah.
as Barry Rebuck used to say, and John Ferguson. Reinventing the wheel. Well, the wheel was developed many years ago. Why would you want to develop a different one? Now, they are developing different types of wheels, but they're not redeveloping the wheel itself. It's a round thing, you roll on it. STEP has a wealth of information. CLU has a wealth of information. There are many people who are expert in a great variety of things, who are members of those associations. And they are all willing to share. I mean, STEP has something called stepping out to lunch the first Monday of every month.
Yeah.
Where estate practitioners talk about the problems they're having. And they talk with each other about how they can solve these problems and what others have done and where they can find information. Family Enterprise, the Family Enterprise Exchange, Family Enterprise Canada. Susan St. Amand and Jim Burton will hopefully be speaking later on about in the series. And they're very involved. Brian Henley, who was one of the first, is very involved with Family Enterprise. And it also is a newish, relatively new, developed by Jim Burton in the past 10 years, association of families and practitioners coming together to express common goals and common problems and to discuss resolution and solutions to those. So anywhere you can do that, anywhere you can meet with people to share knowledge is of value. Get involved in the task forces, in the working groups. Even if you're young and junior and trying to learn, everybody needs people to do work, to do the work of the groups. And you can learn just at somebody's feet that way.
Great. Lawrence, yeah, you're not comfortable talking about everything that I might want to ask about, not on this on this format, obviously, but I know you've had some health issues over the years, and you've had some losses. You keep bouncing back. You continue to do great work. I can't imagine your clients have noticed any difference or any change in the quality of their advice and the work that you're doing for them. Talk to us about that a bit. I mean, you must have a philosophy about that, something more than simply survival. You're
yeah. In 2008, I had a major health crisis. I ended up in the ICU and eventually on dialysis, and didn't do well on it. Anyone who saw me during that period thought I was a con. And I was on my way.
Mm-hmm.
And my wife stepped up and said, you've always figured out a way to beat the system. We're going to figure out how to beat this system, and I'm going to give you a kidney. And we beat the waiting list and everything else. And within 9 months, I had one of her kidneys, which quite frankly is doing fantastically. It is, as they said last week, the kidney of a healthy 15-year-old. And it's happy as long as I feed it a martini every day and champagne on the weekends. And then my wife died 2 years ago. And you understand, when I was disabled, there were a couple of things that happened when I was disabled. One was that Heather said, you have to file a disability claim. Now, remember, I'm a disability claim specialist. That's what I do for a living. And so she filed my disability claim. She and the head of claims at RBC filed my claim and administered it. And I began to understand why so many of my clients have trouble dealing with the claims when they are disabled, and how important our helping them and smoothing the process as much as we could was. When Lucetta died, I began to understand what loss means. It's when my parents died, they both died in January and February 2015. And that was traumatic. And my father had always said, you know, when you become an orphan, it makes a difference. And it does. But when you become a widower, it's a bigger difference. And you realize all of the things that you don't know how to do. You know, I was ignorant of them. Lucetta was brilliant at what she did. And she was very artistic, and she could read a plan for a building, and she could do all of that. And she could embroider the investiture robes for the Archbishop of Canterbury. I can't do that. And you know, I began to learn all the things that she had done for me for 45 years. So, you know, insurance has to be about more than money. It has to be a recognition, as it was when I was selling young insurance or young lawyers insurance. It has to be a recognition of what happens if. Because the what happens if is what we're there to deal with. I'm not sure if that's what you wanted, Ted, but that's as much.
It is, yeah, it is. Thank you, Lawrence. Krista, do we have questions coming in? Do you have anything there?
We don't have anything in the Q&A so far. If anybody watching has any questions, please feel free to add them in the Q&A box so we can make sure to get to them before we wrap at the top of the hour.
So,
Lawrence, sorry, go ahead.
One of the things I would encourage people to get involved in the association. The only way that we have a voice as a profession is through the association. It has become clear that the regulators consider us to be the equivalent of employees. They don't want to talk with us, at least not in Ontario. It is much better in the provinces where there are insurance councils. And the regulation, to my mind, is far more meaningful and comprehensive and client-centered. But the only way that we can have a voice is through mass, it's through large numbers. When we developed GSI, it was the law of large numbers that allowed us to go without underwriting, because with enough people, anti-selection could be minimized as a percentage of the risk, and you could actually have a better result for the company and for the clients than a fully underwritten book. It took years to prove that to the underwriters because it was their job. The same is true of our voice. The law of large numbers kicks in. When you were the chair of LUAC, Ted, we had what, 11 or 10,000 members, whatever it was. Yeah. That gave us a voice. The regulators took note.
Yeah. Yeah. I recall one of the insurance companies made a deal with an investment management group to give them a discount on a Term 100 product that was already underpriced by 12 or 15%. They were actually, they'd announced they were going to increase the pricing at the end of the year. And they were going to give a discount to this investment banking group, I think 10 or 15%, if they came direct to Canada, to the insurance company. And I called the chair of the company and I said, can't do that. You know, we have members that are advisors in your company and you're cutting them out. And some of them have clients that are going to make this deal. And you're going to increase the premium at the end of the year, which tells me that you already know that it's underpriced. So they withdrew the offer. And it wasn't because I was a great salesman. It was because we had so many members. I think we had something close to 15,000 members at that time. That was the stated number. As you know, the number isn't always the number, but it was something close to that. So the numbers certainly do speak. Words, you and I have shared a mentor and someone that keeps getting mentioned on these Meet the Masters sessions, and that's Joe Dickstein. And we lost Joe a few years ago. Just off the top, do you have any thoughts of things that you learned from Joe that you might want to share?
Yeah, sure. As Barry Pascal said, Joe was the one who taught us that you need spreadsheets. You need really good spreadsheets. You need an intimate knowledge of the numbers, but the client doesn't need to see them.
Yeah.
The client needs to see a summary. Client needs to see what does stuff look like in comparison so they can make an informed choice. I remember Joe talking about us as prima ballerinas. And that goes back to a discussion between London Life and Crown Life. Mel Gilbert's father, in fact, Morris Gilbert, and Captain Jeffries of London Life. But where Jeffrey said, well, you know, to Morris, well, you know, one thing about Dixie and his people, they're real prima ballerinas. And Mr. Gilbert said, well, one thing about prima donnas, rather. One thing about prima donnas, they can really sing. You know, it's our job to sing. It's our job to help clients to understand. It's our job to communicate. It's our job to interpret. And that's what Joe did. The other thing I learned from Joe, and you have to remember that I had a very close relationship with Joe. For 40 odd years, any one of my insane projects that I thought up, Joe came along. I mean, every single one of them, to a point where Joe and I rode in my Suburban around Ontario, going from meeting to meeting with the Ontario Securities Commission and Fisco and the MFDA when they were trying to impose a rule on dual licensed agents that the insurance business would be owned by the mutual fund dealer. And Paul Bourbonniere got involved in Zoltan Barzo. And we literally went around the province. And Joe and I think, hit every Dairy Queen, because Joe was a fan of Dairy Queen and Dairy Queen hot dogs. It was the one thing I disagreed vehemently with him on. Joe and I had a lot in common. We had both been swimmers. We were both information junkies, including in the middle of the night. We were both light sleepers and didn't sleep long into the day. We were both a bit OCD, where we really had to understand something. And we were great friends. We had lunch at least twice a week. If we were in town for 40 odd years.
Yeah.
We were members of study group together for almost that whole time.
Great guy. Great guy.
And with Joe, you know, there was a rule, and there's a rule in life. If you have something really important to do, you give it to the busiest person you know. And Joe was definitely the busiest person I knew. If you talk to any one of his proteges, anyone who thought of Joe as their mentor, he made time for them. He would meet them. I mean, Joe would have 4 breakfasts a day.
Yeah.
I remember going to CLU, and I'd have breakfast with him, and then he'd go to another breakfast, and then he'd go to another breakfast, and then he'd come into the meeting, and then he'd go and meet somebody else. And we'd sit at the back of the room, and Joe would lean back at the back of the room, and everybody would come up to him and talk with him. Yeah. Joe was everybody's mentor.
Yeah, he was. Yeah, he was. Lawrence, Krista, if there are no questions coming in, I'll wrap this up. Or just want to say, look, this has been a special honor for me to do this interview with you. You are absolutely a unique person. You've had a lot of influence on a lot of people in our industry, and we're all better for it. I appreciate what you've done with this Meet the Masters, but again, it's been an honor to do this interview. Do you have any closing thoughts?
Thank you. You've done a wonderful job. I'm sure I'm not the easiest person to interview. Certainly, probably the most reluctant. Next week, we have Neil Payton. Neil actually started with Paul Revere Life, moved on to RBC, and then to the Edge Benefits, where he worked with David Prince to make Edge Benefits what it has become, and has been a real success. And that will be, I think, the last interview that I actually do for a while. After that, others will be stepping up and holding them. So Bob Fleischacker follows Neil Payton, and Paul Bourbonniere will be interviewing him. Then Brian Mallard and Julian Wise will be interviewing him. Mario Malatesta and Dave Patriarch will be interviewing him. And so, as you can tell, we have quite a comprehensive agenda of interviews coming, but a very varied group of people. I guess the commonality is we've been looking for people for the initial group who have made substantial and substantive contributions to the profession and to others. And we can all learn from them.
Lawrence, thank you. We'll close. I see it's 12 o'clock. We'll close and thank everybody for tuning in. Thanks again.